Good night, everybody. My name is Huvanon. I'm here to give you folks an update video in the overall markets. Let's go over the S&P 500 and the Qs. You all know the drill here. So let's get ready for next week. Let's start off with the S&P 500. So without further ado, if you're new here to the channel, welcome. I would recommend you folks to watch our previous S&P 500 videos, our Qs videos, and all the other videos where we talk about our positions that we're studying in the channel. So go ahead, watch that. I will give an update later because I know we will run out of time on this video, so I won't cover all those positions. So they'll be separate. Okay. So S&P 500. So clearly from our last time, we let's pick up where we talked about our last time. So last time we were talking about this parallel channel, right? And we were connecting that from the June 9th low. We're connecting it from our recent low here from July 29th. And then we're connecting it from our former all-time high, June 2nd over here. You get this beautiful upslope and parallel channel. We broke out here and we confirmed, and right now we're watching this red trend line here, this upsloping trend line here. Oops, I forgot. We're supposed to go on logarithmic. So we're on logarithmic. We're on a daily chart. And this trend line comes back from way over here. So before we had our liberation sell off here, we're connecting it from here, this February 19th high. And you can see every time we touch it, we get some sort of major pullback. Here's when we started a war with Iran, and then we started rolling over here. Here's the hiccup in the markets with the CapEx spending worries and all that good stuff. And right now we broke out, we confirmed that this upslope and parallel channel. And right now, since we did confirm, it raises the probabilities that we're going to go a little bit higher. And what I think is if we do keep going higher, this is going to be the final line in the sand for the bulls to conquer it. If we conquer this, then I do think the rest of the measure move of this bull flag will play out. And what we talked about is this is the flag pole, right? If this is a bull flag, we break out, we confirm, and if we get through here, then the rest of the measure move suggests we go to 8,200, right? So that's what the measure move says, right? But we first have to clear this trend line right here. But we know that every time we touch that trend line, we get some sort of big, correction move or some sort of a pullback here. So we had a big correction move. We had a pullback here, a pullback here, right? So that's what we have over there. And that's what we're studying for, and what we're watching for. And so short term, this is what I'm looking for in the daily chart for next week. Do we finally touch this area? And if we do, what's going to come out of it? Are we going to get a topping tail, a reversal signal? What can we expect? So for me, this is going to be major resistance, and this is what I'm going to be looking for. And if we close above this and we confirm, then I would cut personally my short. I would cut it off, take the loss, and then let the measure move run and look for long setups and all that good stuff, right? But for me, I'm still gonna hold on until we negate this trend line here, right? So if we negate this trend line with confirmation, it's over. Bulls will win, it'll go higher, right? So, and remember, we were talking about our 2 month thesis as well. So let's get rid of this. Let's take a look at our 2 month thesis parallel. So let's get rid of that, and we go to the 2 month chart. Make sure we're on logarithmic. Yeah, we are on logarithmic. And remember, for our parallel, we're connected COVID low, liberation sell off low, bull run high of 2021. We get this parallel channel. And then here, this middle part of the parallel channel has been keeping price in check and capped for the long time ever. So let's go back to the daily chart and let's see where we're at with that. So if we look at it, we're getting very close to that middle part of that parallel channel. And look, and the only reason why this is super important is because every time we touch it, we get some sort of major correction, right? So we get some sort of pullback. Here we pierced it, pullback. Here if we hit it, pullback, kissed it, pullback. And we even had multiple daily closes above it before. So if we really zoom in, we have multiple daily closes above and it still meant nothing. So on a daily chart basis, even if we close above the middle part of that parallel channel, it doesn't really mean too much to me, because I got to be open to the idea that maybe we can get a reversal there. So again, let's connect that trend line, that red trend line there, and I'm pretty sure it kind of like coincides with where we were over there. So it'll be where we had our previous red trend line. It was somewhere around here. So let's make that red. That's our trend line that we were looking for, and it's literally right there. That's like the that's literally it. That's the trend line that we're mimicking, right? With the red big the in our previous couple of minutes ago in our previous video. So That's what we were talking about. So I'm really watching this trend line here. And remember the 2 month. Why is that important? Because remember, we have a stochastic RSI where that we're trying to hold. So we're not sure if we're gonna get a scenario like this that mimics like this where we had a correction move, we're back up and we're gonna hold it. Is that a possibility? Maybe. Or we could start to roll over and that would be a negative, right? So we don't want to see this rolling over. So if you're a bull, you don't want to see this roll over. And then we also talked about that we have our are we making mimicking like the dot com where we had a high here, then we came down, and then we're making a lower high before our bigger move lower. Here we have a high here, and this is potentially maybe a lower high, but we have the market has to keep going higher, in order to so we don't repeat something like this. So we're watching for that, and then also we talked about our 12-year divergence. So far it looks like it's negating that divergence, so that's a good thing for the bulls. So right now we're piercing it. So remember, we were talking about how every time we touched that negative divergence, here we had an instance where we stalled. Here we had a correction 15%. I believe it was 15 to 20%. Maybe we can make a little measurement right here so we can know for sure. It was 20%. And then here we had an anomaly, the COVID crash. And here when we touched it here again, we had a bear market. And then right now we're piercing it, but we haven't had any body close above the middle part of the parallel channel, not in a significant manner, and we haven't even had confirmation, right? So we already know about that. That's all in our deep dive analysis and the bigger time frame videos. And again, we haven't really closed this candle here. We still have 14 days, 20 hours before we finally confirm on the RSI that we have conquered the negative divergence in the RSI. So we still have the end of the month to know for sure, but within this time frame, we can still roll over. So we have to be open to the idea that maybe this is going to be in the area of major resistance. So we're paying very close attention to that. So that's the area. That's what I'm looking for, folks. This area, which is where we had our red trend line. So around 7,900 on the S&P 500, somewhere around there. I have an alert just front running it a little bit, just a tad bit. And I'm just going to be watching that very, very carefully, folks. All right. So that's my level in the S&P 500. So that's what I'm looking for. So I know that the chart looks a little weird because we don't have any drawings, but here's the parallel where we broke out from, and here's that trend line, right? So we're looking for this area right here, 7,900. That's my area. And then also I want to pay attention to the shorter time frame. So usually we don't pay attention to like the 4 hour or the 1 hour chart, but here is something very interesting. So let's look at the 4 hour chart, and I also want to bring in my RSI. Check this out. So let me hide the stochastic. Let me hide the money flow indicator. But look what we're doing. So actually, in the daily, it looks like we formed a bull flag, right? So it looks like a bull flag, and we're breaking out, right? But if you look at it in the lens of the 4 hour chart, what is this actually? This is starting to look to me at least like a rising wedge pattern. And rising wedge patterns are actually bearish signals. So during day trading, I look for these patterns for reversal signals, and if they have negative divergence, that's even a plus. So for me, the RSI is flat. You can maybe make the case for that it's a slight declining one. So I don't really think maybe it is. It's just maybe like it's like flat, but it's slightly declining, but it's not an obvious negative divergence, right? So to me, I wouldn't put a lot of weight into that. So I would not put a lot of weight into that negative divergence. But I find it fascinating that we're making like a rising wedge pattern. And usually these tend to break to the downside. So if we do come down, I would think it would probably come down to test the support level of the parallel, right? Where we broke out from. So that would be that. But watch to see if it just breaks and tests the top part of our blue parallel channel from our bigger time thesis, which is that big red, thick red trend line that we had in the beginning of the video. It's literally that. It's just mimicking that, guys. So that's what it is. So that's what I'm looking for. Resistance on that. Again, we talked about the dangers, how we don't want to make a negative divergence. Here we have a high, we have another high, but we want this RSI to come back higher and take out this RSI high, or at least come to even to it. Because if we start rolling over here, then guess what? We're making negative divergence. High, higher, high, lower, high, and that would be bad, right? That would tell us that we're going to get a bigger move down, right? But for me, right now, we just gotta wait. We gotta wait and see what comes out of this. And the stochastic RSI, this is something I'm also paying attention to. It's literally maxed out. Maybe we're having a scenario like this, and then we come back down. And if we do come back down, I'm expecting that pullback, right? And we were talking about scenarios that if we do get the pullback, and if we don't hold the parallel, where would be our support level? I said before, the gap fill. Pivot over here, former all-time high. Here's this another area right here. So there's this consolidation of price action here. And if we still somehow go a little bit lower that, remember, we're talking hypothetical. I'm not saying that this is what's going to happen, but I'm just saying if the worst case things happen, these are things I'm looking for. I'm already prepared. I'm already thinking about every possible contingency. Remember, here's our previous wedge pattern that we've been studying from, right? We broke out, we confirmed it would be a healthy thing to get a retrace and maybe get our next leg higher. That's a possibility, but there is always a possibility where that we actually maybe want to touch here because remember we did confirm the breakout of the parallel. So that favors move to the upside. So what if we come up here to the upside, test this major trend line right here, and then get the pullback to come back down here? I don't think it's going to be a dramatic pullback like this, but maybe what if we get something like this, right? Like a slow pullback, right? That's a possibility. Like I said before, like the way I draw it, I do not think it's going to be like a dramatic move to the downside. No, so please bear with me. I don't think it's going to be like that. I think it's maybe something like a rollover, right? If we get a gentle rollover, then that would be a healthy thing because it'd be a healthy retrace to then get the leg higher, right? So that's what I'm thinking for now. But then remember, we also thought about even further that if we do not hold this wedge pattern and we come back and fail, then that would tell us we would have a bigger move to the downside, right? But for now, we broke out of the parallel channel. So let's redraw that parallel channel. So we broke out of that parallel channel, we confirmed. So things are looking pretty good, looking pretty bullish. The 4-hour chart is showing us that maybe this is a rising wedge pattern that maybe wants to come back and retest the top part of the parallel. So, and again, we already talked about the scenario if we don't hold the parallel, but I'm thinking since we did confirm, it's telling us that we want to touch or retrace this part 7,900. That's where I'm going to be looking, and maybe potentially do a final add on my short there. And if it does conquer that level, closes above, and confirms in a meaningful way, then I would cut the short. Take the loss. It doesn't matter. I was in it with the short, small position anyways. I only had like 2%, so who cares, right? You can't win every trade. You just have to be able to quickly switch the thesis and follow your rules. And but I mean switch thesis. I mean like switch sides and just know when to lose. Put the ego aside. If your rules are broken, if your thesis is broken, you lost. Like that's it's trading. It's okay. You can't win every trade, but for now, the thesis is still there. I'm still watching the chart, especially the 2-month chart. Like when we saw that 12-year divergence, I'm still being very careful because the 12-year divergence is not something to be messing around with. Stochastic RSI and maxed out. This is telling me to be just proceed with caution. And we already know that if we do confirm and break out of this middle part of the parallel channel, the chart, this is what the chart is saying, not me. The chart is saying we probably touch or test the top part of the parallel, which is 10,000, right? That would be longer term. I don't think it's going to be getting to 10,000 in a month. No way. This is probably like a longer term projection if we do conquer this middle part of parallel, but we haven't been able to do it for the longest time, right? And plus we're at the top part of a divergence, so we have to be very careful. And then we all just studied like the semiconductor trade, and I posted an Nvidia chart. Remember that Nvidia video? So if you haven't watched that, go watch that. Nvidia has a negative divergence on the monthly chart, and our bearish thesis is still intact. And if that chart in Nvidia is showing a negative factor that it wants to go to the blue fibma, then this is telling us that we're pretty close to a bigger market correction at some point, right? And maybe we don't confirm out of this middle part of the parallel, right? Of our bigger time frame thesis in the S&P 500, right? So that's what I got for you folks on the S&P 500. So let's move on. Let's go to the QQQs. Let's get you guys ready for that as well. So remember, we're on the Qs now. We're going to be off logarithmic. And also, I found a new trend line. So here's our new trend line I'm going to be monitoring because we're so close to it. So I would think, look, if you connect this high from June 3rd and you connect this high from June 22nd, this is an area I'm going to be watching for. I'm going to put this as red. So I'm going to be watching this. So maybe a good day trading opportunity here to short the Qs for day trade only. And from there, I'm not quite sure what would come out of this. So maybe is this going to be major resistance? That's a possibility. But this would be the third touch of that trend line. So maybe we can get rejection here. So that's something I'm watching too. So let's see. That would be around, let me see here, 737.20. So that's what I'm looking for. And again, that's the high from June 3rd. You're connecting the high from June 22nd. You get this trend line right here. That's what I'm going to be watching. Remember, we had this downslope and parallel channel that we broke out and we confirmed finally, and that means any retrace to the parallel would be a technical buying opportunity because we were trying to hold that support and maybe get a bounce off that because we are confirmation. The confirmation signal, all it does is raises the probabilities that we're going to go higher. The probabilities are are favoring that we get a retest to our former all-time high, right? Maybe a double top, pierce it. Who knows what comes out of that from there? I would think maybe a rejection from there, a test. We test it in rejection, but from now, we also have to watch this trend line right here, that our new trend line that we're watching here for resistance in these coming days. So I'm watching that area resistance. If we do hit it and we get a pierce or we get rejected from here, I would look for the retrace of the parallel to try to hold support, right? That's what I'm looking for personally, because remember when you confirm a breakout of the parallel with confirmation on the confirmation signal, it just raises probabilities we're going to go higher, but the retraces would be considered support because you flip what was resistance, you conquered it, now it becomes support, right? But there's always a chance that it could fail because remember, we're trading in a world of probabilities, not certainties. So right now, the odds are favoring we get a move higher, but there is always a possibility we can get a failed move, a retrace, and if we do, I've already talked about those levels before in a previous video, and I would think the gap fill, right? If we fail to hold the parallel, because the parallel will be our first line of defense because we confirmed. So what was resistance becomes support. So here would be your support level to maybe get the bounce to get to the to test this trend line again or to go to the all-time high. And if we fail to hold the parallel, I would look for the gap fill right here at $700.07. There's an area of confidence right there. And also, we put your moving averages, the 21 SMAs right here. Or we talked about that as well. And if we fail to hold the gap fill, look at this area right here. We had the 100 moving average, the middle part of our downslope and parallel channel right here, and then this other blue trend line right here is from our bigger parallel, right? From our bigger parallel from the bear market low of 2022, the liberation sell off, and we connected to the bull run high of 2021. You can see how we bounced off that middle part of the parallel channel. We broke out and we're trying to hold it. So that would be a retrace right here. And then not only that, we also talked about how this level right here from June 9th right here. See, look at this right here. This area X marks the spot right here. There's a lot of confluence. This would be major support right here. This area of basically 700. I mean, yeah, 700 to like around 685.75. That would be the area for me. I would buy right there for swing trading to go along. So again, those are things I'm looking for right now, guys. So these are the levels. So the main level I'm going to be watching is this one right here, guys, for this coming week. We're very close to it. So around here, 737.17. Watch, do we pierce it? Do we close above in confirmation? If we do that, then I gotta believe we're gonna get a new all-time high, right? All right, so this is the final line of resistance that I have for you guys. If we get that, if we close above, confirm, look for double top, look for a new all-time high, and from there, do we pierce it then get rejection, or do we just blow through that thing out of the water, right? So leave your comments below. What do you guys think? I hope this video helped you in any way, and if it does, I would appreciate you if you leave a comment, boost, like, subscribe, do all those good things. And I'll see you in the next video where we're going to talk about our positions so that we're studying in the channel. All right, I'll let you be. Have a good one, guys.